But how will overnight cues impact our own markets? We have a research team joining in this Friday morning to tell us what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, tell me all about the market cues. Looks like it could be a down day.
Well, you're absolutely right. A very mixed handover, like you mentioned earlier today. The good part is, when you're talking about crude oil prices, yesterday saw quite a significant correction. So almost a 5% correction as far as crude oil prices are concerned. Brent futures now hovering around the $77 a barrel mark. Yesterday, Indian markets, while, the start was very good, you did see a gap up opening. And, almost through the trading session, this kind of gains actually did sustain. In the last hour, however, the story was very different. Last hour, there was quite a bit of significant selling. In fact, the Bank Nifty closed in the red, despite staying, despite markets actually being in the green throughout the day. Now, the other part of the story, of course, remains the mid and small cap index. Yesterday, both the mid as well as small cap index hit record highs. So that performance, or that pocket of outperformance continues as far as the entire overall breadth of the market is concerned. Now, when you're talking about yesterday's trading session, IT pack, that was the one that clearly outperformed. In fact, even within ITs, the mid-cap IT, we spoke about this day first day as well. Even yesterday, that was the story. Now, talking about the key event to watch, all eyes and all action will be dominated on, as far as banks and NBFCs are concerned after the RBI circular. Asian markets as well as GIFT Nifty indicating a muted start for our own markets today.
Okay, all right. That is about the market setup, but a lot of stocks that will be on our radar. Abhishek is joining us now.
Well, to begin with, RBI has increased the risk weight assets for lenders. That requirement has been increased in unsecured lending like credit card, personal loans, and also, towards bank loans to NBFCs. So keep in focus SBI card, it will need higher capital for growth ahead, and NBFCs with unsecured lending and high proportion of, bank borrowings for them. JSW Infra, they have received letter of award to develop Kenny Port in Karnataka. The quantum is about 4,119 crores. TVS Motors, they have a strategic partnership with EMIL Frey for key European markets, distribution of partnership that is being done for the market in Europe. DCX System board meeting will be held on November 16th. That is for raising of funds aggregating up to rupees 500 crore. JSW Steel company, upon considering a demand and supply scenario of iron ore in India, has withdrawn its application for the final mine closure plan that was submitted on 1st of September 2023 in the district of Odisha. SJVN, they have signed PPA for 200 megawatt wind project with SECI at a tariff of rupees 3.24 per unit. Now, SECI is Solar Energy Corporation of India. Sources to money control, SoftBank is planning to sell stake worth 150 million in delivery via block deal. Now, SoftBank may sell about 4% stake if block deal fructifies. Brigade Enterprise to develop 2 million square feet with a gross development value of about 2,100 crore in the area of Yelahanka, that is there in Bangalore. Back to you.
All right, those are all the stocks on our radar. Let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel, morning.
Well, morning. Yesterday it appeared that we were set for a good finish, but towards the end of trade, the Nifty bank, well, that came off the high point of the day, and that's what put some pressure. But one observation was the Nifty ended higher, but you had the India VIX as well that moved up. Yes, it's moving up from bombed out levels, but that's normally a cautious sign. And that's precisely, what happened yesterday. Now, in terms of the Nifty bank, well, we were highlighting this yesterday numerous times, all through the day, that the Nifty bank is approaching this 50 and 100 DMA. And if you look at the graph, as it hits that level, the resistance level of around 44,250 to around 44,500, we do see a bit of a pullback. And that's what happened yesterday as well. We went to that level, we couldn't sustain. But the shorts, well, they have been covering out big time. And at the start of this series, I recall mentioning that, don't be so worried if the FIs are very, very aggressively net short. Because if they get caught on the wrong side, well, they're going to be forced to cover out. And we're going to see a big bounce. And for the month of, for the series of November so far, we're up 900 points. And the FIs were aggressively net short, and gradually they've been covering those positions, as that chart tells you. In the last two sessions, what stood out for me is the net institutional buy number. That's the DI and the FI, you put it together. They bought more than 1,400 crores per day. That compares with a negative number of around 160 crores on an average for this series so far. So the institutions are showing us the money, which is helping the Nifty itself. On the index options side, well, I'm looking at the 19,700 put, because that has a fair bit of open interest built up. And that's the important mark. premium out there came down from around 100 to around 60 rupees odd. But there was a sense that there was writing out there, which brings us to the levels. Since there was writing at 19,700 put, well, your near-term support comes in at 19,625. I say this because I've just taken an average of what the rough rate. It could be around 75 rupees odd. Yesterday's high, that becomes a bit of a resistance out there. And the Nifty bank, important levels to track will be the 50 and 100 DMA. The level comes up for you on the screen. That's the resistance zone. And the 20 DMA, that's the first level that you're looking at. You wanted to trade above the 20 and 200 DMA. So the 20 DMA becomes a first reference point. Back to you.
Okay, all right. Thank you so much for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, Reserve Bank has tightened loan provisioning norms for banks and NBFCs to check the rapid surge in unsecured retail loans. We'll explain all that to you when we come back. Stay tuned.